morning, you're watching The Mint, I'm Andy Hodges. In our main story this morning, we ask if real estate investment trust, REITs, are coming to Zimbabwe. A real estate investment trust, or REIT, is a company owning and typically operating real estate which generates income. Most REITs specialize in a specific real estate sector, however. Diversified and specialty REITs often hold different types of properties in their portfolios. Properties included in a REIT portfolio may include apartment complexes, data centers, healthcare facilities, hotels, infrastructure, office buildings, retail centers, and warehouses. One benefit of REITs for everyday investors is that they provide the opportunity to own a portion of real estate which generates dividend-based income. Justin Bongoni, CEO of the Zimbabwe Stock Exchange, spoke about REITs in a recent episode of The Mint Special.
In Zimbabwe at the moment you can launch a REIT. But the problem that you have is what we don't have at the moment is the tax. Because it's very important to get the tax. If I can explain quickly how it works. So the way you think about REITs is you are mimicking owning a property. Remember, when you own property, you get your rent every month or every quarter, depending on the arrangement. The problem that you have at the moment, if it's a property company, you don't get money until the end of the year. And when you get it, that company itself has been taxed, so there's less. And when you get the dividend, also there's withholding tax as well, and you get even less. So when people then buy shares in a property holding company, it's not the same as having your own property. REITs does that. So what REITs does is it allows the money to flow through to the shareholder with being taxed much less. One of the biggest needs at the moment in terms of accommodation is student housing. It's a perfect product for student housing. And so we're talking to the ministry at the moment, and I hope he feels the pressure and he's looking at the tax. You can do a REIT, but unfortunately there's no tax, so that's why people are not doing it. Okay. But you can do it.
Zimbabweans are famous for their love of owning property, and REITs would give savvy investors an opportunity to also invest in exchange-traded REITs via the Zimbabwe Stock Exchange. As Zimbabwe's property market is expected to develop, REITs are a potential way for more investors, including retail investors, to participate in large-scale income-producing properties. They allow investors to reap benefits of indirectly owning property as an asset class. The share price of REITs is determined by market forces. As with all investment products, the risk assessment of REITs is very crucial to ascertain whether the product fits your profile and your overall financial plan. As the Zimbabwe Stock Exchange gears up to introduce new products and services, REITs could be one such product that is coming soon. National Social Security Authority NSSA's decision to invest offshore yielded a $2 million in dividend payments between 2017 and 2018. NSSA invested $20 million in Pan-African financial institution African Export-Import Bank, Afreximbank, at the end of 2017 as a strategy to preserve the balance sheet value. Afreximbank is headquartered in Egypt and is listed on the Mauritius Stock Exchange. As at the end of 2017, the bank's assets totaled $11.9 billion. The NSSA investment yielded a hard currency $1 million dividend in 2017, thus giving the authority a dividend yield of 5%. A similar dividend was declared in 2018. The investment would provide an excellent hedge to currency risk and cover for the authority's foreign obligations, NSSA said. For the period under review, NSSA's total investment assets amounted to $1.6 billion. In 2018, the authority also received a significant windfall from its associates and other strategic investments. Acting Managing Director David Makwara said, the share of profits from associates increased by 138% from $28.6 million in 2018. Share of profits in FPC Holdings at $12.8 million, ZB Holdings at $7 million, and Turnal at $1.1 million contributed significantly to performance of the business. The investment gains contributed to NSSA posting a $180 million surplus for the period, but the authority is still receiving criticism for poor remuneration of pensioners. Last November, the authority effected an upward adjustment in pension payouts, with the lowest earning pensioners getting $200, up from $80. In terms of the current compensation framework for NSSA, pension payouts are based on one's contributions. But over the past 2 decades, the Zimbabwean economy has been hit by 2 rounds of hyperinflationary periods that eroded the value of pensioners' contributions. The NSSA chairman has pointed to the authority's outmoded operational model. The legislation which covers NSSA was put in place in 1994, and it's about time it is reviewed as things have moved on and there is need for its revamping. A fund investing in women fund managers on the continent has been launched through a partnership between the United Nations Economic Commission of Africa and Standard Bank Group. In a statement, the organization said the fund will provide capital to both first-time and experienced female fund managers. The fund targets those in support of UN Sustainable Development Goals 5 of gender equality and 8 on decent work and economic growth, and African Union Agenda 2063. The fund, whose current goal is $100 million, has already received over $20 million, with President Paul Kagame of Rwanda pledging $500,000. Among the world's leaders who witnessed the official launch of the Innovative Impact Investment Fund were UN Secretary General Antonio Guterres, African Union Commission Chairperson Musa Faki Mahamat, Ethiopian President Saleh Work Zewed, Mr. Dr. Vera Songwe, UN Under-Secretary General and Executive Secretary of ECA, said, "We are turning the tables and making women the decision makers of investable money in Africa. We want women to be on the supply side of money, not only on the demand side." In Africa, women-owned funds and businesses struggle due largely to lack of successful fundraising, insufficient exposure to systems and procedures, and lack of track records, among others. They also contend with gender-based social expectation, resistance to women in leadership roles, and lack of a support network. The fund will empower Africa's women by giving them access to financial resources and investment management expertise. Sola David Borja, Chief Executive of Africa Regions of Standard Bank Group, says the fund aligns with the bank's purpose to drive Africa's growth and presents an opportunity for Standard Bank to leverage our footprint and expertise on the continent and the relevant experience of our asset management firms, Melville Douglas and Stanlib Multi-Managers, to build Africa's economies. Africa is our home, we drive her growth, she said. Women fund managers will receive a deployment of capital and subsequently invest in majority female-owned businesses. Even though the fund is sector agnostic, priority sectors will be education, manufacturing, healthcare, clean energy, and agriculture. Additionally, technical assistance for fund managers and entrepreneurs will be offered through the initiative. This ranges from building capacity, direct mentoring, to leveraging technology in health and education. Business Insider reports that mining company AngloGold Ashanti has sold the last of its South African businesses in a $294 million transaction with Harmony. The deal announced this week brings to a close the long history the firm and its predecessors have had in South Africa. AngloGold has its roots in multinational mining company Anglo American, started by Ernest Oppenheimer in 1917. At its prime, the company was one of the world's leading gold miners. Anglo American originally focused only on developing and expanding the country's East Rand gold mines and saw massive expansion by tapping into the rich gold fields of the Vaal Reef and Free State. By the 1960s, Anglo American had further diversified by opening its first uranium plant in Gauteng, and it then created the Swaziland Iron Ore Development Company. The company made their first global move in 1961 by investing in Canadian mining company Hudson Bay Mining and Smelting Company. In the 1970s, it set up an office in Brazil, a move that would lead to new interest in gold, nickel, niobium, and phosphates, and iron ore across the country. In 1998, the company consolidated its interest in gold and uranium by forming AngloGold. Later that year, AngloGold became the first South African company to list on the New York Stock Exchange. It changed its name to AngloGold Ashanti after the 2004 merger with Ghanaian company Ashanti Goldfields. In 2006, Anglo American began reducing its stake in AngloGold Ashanti, and by March 2009, the company had sold its remaining shares in AngloGold Ashanti, officially marking their exit from investing in gold. Now, 11 years later, AngloGold Ashanti has sold its last South African assets to Harmony Gold in a deal worth about 4.4 billion rand. Since taking control of the company in 2018, Chief Executive Officer Kelvin Dushnitsky has shifted the company's focus towards more profitable mines in Australia, Ghana, and the Americas. 2 years later, AngloGold only had 2 South African assets left: Limponeng Mine in Charlottenville, the world's deepest gold mine, as well as its Mine Waste Solutions business, a mining waste retreatment operation. Both were sold to Harmony Gold at a steep discount to their accounting values. Harmony, backed by African Rainbow Minerals, has been looking for new opportunities as reserves at its South African mines continue to decline. So why are international miners leaving South Africa? Well, operational problems, particularly labor strikes and load shedding, have likely contributed to this, as has political risk. While talk of the nationalization of mines has died down, South Africa's third mining charter, which requires 30% black ownership for companies that apply for mining rights and has much stricter procurement rules, is seen as a deterrent. South Africa's biggest gold producer, Sibanye Gold, last year said that it was not spending new capital to grow its SA operations, as the investment climate is not yet conducive to make decisions that require billions of rand. Clean Technica reports that in a series of tweets this week, Elon Musk said Tesla is ramping up the installation of its third-generation solar roof called Solar Glass Roof in the San Francisco Bay Area, and it expects to announce availability in China and Europe soon. Elon Musk announced last October the solar glass product will be ready for widespread deployment soon. Version 3 is finally ready for the big time, he said. The original solar roof had glass panels that mimic the appearance of conventional asphalt roof shingles, but the solar glass product uses glass panels that are significantly larger than traditional shingles. It will take a while for customers to get used to the new look. Condo associations, homeowners, and historic preservation organizations will rail against the new design, but it's intended to be less costly to manufacture and quicker to install. At first, a solar glass roof will be available only in black, but Musk suggested Monday that other colors and finishes will be available, hopefully, later this year. You've been watching The Mint. I'm Andy Hodges. Please follow us on our Facebook page, Zim Papers TV Network, our website, ztn.co.zw, and YouTube under ZTN. Your comments are welcome via our Twitter handle @ZTN News, and of course via Facebook. Join us here on The Mint every weekday morning at 6 a.m. Central African Time. Well, that's it for me this morning. Goodbye. Have a profitable business day, and you all be safe.